Hello and welcome to SWAC Academy. Mohnish Pabrai bought Alpha Metallurgical Resources. As you can see here, the company makes 10% of his wagons fund portfolio. In this video, I will make an in-depth stock fundamental analysis of the company to see if it is undervalued and why Mohnish Pabrai bought it. I will cover its history, business model, growth, balance sheet, profitability, outlook, valuation, and finally do the 3M analysis. So make sure to watch till the end of the video. Alpha was founded in 2016. Its current chairman and CEO is Andy Aitson. Its headquarters is in the USA. The company has a $4.44 billion market cap. Its stock is trading around $341 at the time I'm making this video. Alpha Metallurgical Resources is a leading coal supplier with underground and surface coal mining complexes. It owns large coal basins in Pennsylvania, Virginia, and West Virginia, which supply both metallurgical coal to produce steel and thermal coal to generate power. Metallurgical coal or coking coal is a grade of coal that can be used to produce good quality coke. Coke is an essential fuel and reactant in the blast furnace process for primary steel making. The company's revenue chart is all over the place. The revenue increased in 2018-19, then decreased in 2020, afterwards started increasing until it reached the peak in 2022, then decreased again. The reason is that the revenue depends on the met coal price, which is cyclical. This is the met coal price development over the years. As you can see, it is very volatile. If we put both charts together, you will notice that the revenue follows the met coal price. It decreased in 2020, 2021, then increased in 2022, and then decreased again in 2023. So it is not possible to determine if the company is growing its sales or not. Now let's check the profitability of the company. The gross profit is the result of revenue minus the direct cost to create these revenues. The gross profit margin is the result of gross profit divided by the revenue. The gray line in the chart represents the gross profit margin over the years. The gross profit margin goes up and down with revenue, which is typical for a mining company. Now let's check the operating profit and the operating profit margin. Operating profit is the net income derived from a company's core operations. It is the amount of money that a company has left over after meeting its operating cost, but before paying its taxes. The operating profit also fluctuated with the revenue. It went negative in 2020, then increased in 2021-22, decreased again in 2023. So the company operating profit fluctuates with the volatile price of met coal. The same can be seen with the free cash flow. So to summarize, the company is profitable and the amount of money it makes depends on the met coal price. The cost per ton that Alpha has is between $110 to $116 for coal production. Now if you have a look at the met coal price chart, the selling price is between $78 and $408, which means if the met coal price is above $116, the company will be profitable, otherwise it will lose money. Now let's have a quick look at Alpha's balance sheet. Alpha Metallurgical Coal has $1.048 billion in current assets. The current assets are the assets that are liquid and available to the company within 1 year. They include cash and short-term investments. The total current liabilities are the liabilities which the company must pay within 1 year. The company's total current liabilities are $309.9 million. Alpha's total liabilities, including long-term debt, are $832 million. By calculating the current assets minus the current liabilities, Alpha is left with $738 million cash on its balance sheet, making the balance sheet extremely strong and healthy. Alpha can use this money to buy back stocks or invest in the company. Now let's jump to valuations. Alpha has a 1.46 price to sales ratio, a 6.93 PE ratio, a very cheap 5.12 price to free cash flow ratio, and a 2.81 price to book ratio. Pause the video and check how the current ratios compare to previous years. Although the valuation are more expensive than in previous years, the company looks cheap with the low valuations. However, if the met coal price goes down, which is possible in the future, and the earnings of the company decrease, and the stock will be expensive. Now let's do a discounted cash flow analysis to determine the fair price and intrinsic value of the stock. This is how my model works. I calculate the worst case scenario to determine the downside, a normal case and best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal multiple or the PE multiple at which the stock will be sold in 10 years. The fourth column represents the discount rate or the rate of return the stock will grow over the years. Considering a 5% growth for the first 5 years, a 3% for the 5 years afterwards, a terminal multiple of 8 and 15% discount rate, the intrinsic value of the stock is $325. Alpha is trading at fair value at the moment. The main client of Alpha Metallurgical Resources is India. The company expects the demand to more than double in the next 20 years. If the price of met coal stays high, the company will make a lot of money. The company has a diversified portfolio of mines and reserves and represent 20% of the total US coal production. However, the fundamentals of the company strongly depends on the volatile met coal price. The company has minimal debt and is using its earning to buy back shares, increasing shareholders' value. Since mining companies do future contracts, they probably have contracts for this year and the next with the current high price of met coal. We will see what happens afterward. Finally, the 3M analysis, 1M for moat, 1 for management and 1 for margin of safety. Alpha has no moat that protects it from its competitors. It is one of many mining companies. Management did a good job allocating capital thus far. They bought a lot of shares which increases shareholders' value long term. The company is trading at a fair price and has a clean, strong balance sheet. So in conclusion, Alpha is a good company with a clean balance sheet trading at fair value. The value of the stock will probably increase in the next couple of years due to the high price of met coal, the increasing demand and the shares buyback program. Should you buy Alpha stock like Mohnish Pabrai did? Well, if you are a value investor that buys cheap companies and sells them in a couple of years, then you should consider it. I myself am a buy and hold investor. I buy businesses that I never have to sell. And Alpha has no moat and strongly depends on the volatile price of met coal, so I will pass on it. Let me know in the comment section below what you think of the company and if you will buy it. If you found value in this video, please give us a like. This helps a lot and consider subscribing. Thank you very much for watching.